You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Time to rock and roll with the option block. My name is Mark Longo, your guide, your boatman on the river Styx, if you will, for this show. I guess that means the option block is the options market is the river Styx, and I'm guiding the boat is the show, and I'm the boatman. There we go. To make that analogy complete. Welcome to our bi-weekly options extravaganza. You guys know the deal. Hopefully you're listening live. If so, welcome. If not, listen by a podcast. You know how to get all that fun stuff as well. So get it on the outlets. Our friend there just mentioned it, of course. As always, hit us up. Questions, comments, insights. Make sure you play along, vote in our polls, too. Those are always fun. We like to know what you guys are thinking, what you're talking about, what you have on the brain. So that's how we do just that. And, of course, we do. Yes, we do. Like to hear from you guys. All right, and joining me on the old program today on this journey through the river of death to the lands beyond. Let's start off with Uncle Mike Tosaw from St. Charles Wealth Advisors. Uncle Mike, if I'm the boatman, I guess I don't know what that makes you. Maybe you're the guy who collects the coins.
Hey, I want nothing to do with this River Styx stuff, unless you're talking about Styx the band, or you want to start jamming some Lorelei, or the Grand Illusion, or Paradise Theater. That's one thing, but the River Styx, that's not me. In St. Charles, we got the Fox River with our boats here, the St. Charles Belle and the Fox River Queen. But this River Styx stuff, you're on your own with that one.
What can I say? I'm still in my post Halloween glow here. But I like that. You know, you got your '80s bands there in St. Charles. I could see a little Styx love. You can't go wrong with a little bit of Mr. Roboto.
That's right.
And as I'm saying, Domo Arigato. Let's say Domo Arigato to, he's not quite a robot, but he is kind of a one-eyed volatility rapscallion, Mr. Andrew Giovinazzi from OptionPit.com. I like that, rapscallion, sir. Is that a good one for you?
A one-eyed volatility rapscallion. That is, maybe that could even be accurate. You could have hit the nail on the head. What the heck?
You're talking about rocking the patch? It'd be a pretty cool look, I think, for you. Maybe then you could be the volatility pirate. How about that?
Rocking the patch. I don't know if I want to be a volatility pirate. That has all kinds of funky connotations.
The Vol Pirate newsletter. Just think about how many subscribers you'd have. Everyone would sign up for that. I want to be a Vol Pirate. It sounds cool.
I have to say a lot of your catchy phrases for marketing are pretty good, but the Vol Pirate newsletter. I
don't know. You could join me, help me raid the Spanish galleons of market volatility. There you go. Steal those doubloons in terms of ticks and VXX and VIX. There you go. See, the whole thing, it just writes itself. I could go on for days, listeners. I probably could. But instead, let's just keep on going right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
That's what happens when you guys get me going on this earlier showtime here at noon. The pearls of wisdom just flow at an abundant rate. All right, joining us here on the old show. Like I mentioned, we are streaming at you live a little bit past noon central here. What is it? The 12th of November. Hard to believe we're already almost midway through November. Crazy town here, but we are. And speaking of crazy town, the market's taking a turn into crazy town a bit as well today. And they decided, enough with the rally. Let's get back into that kind of seesaw, whipsaw, downside action. And that's kind of what's leading the dance today. Mostly red on the screens. We've got the S&P off nearly 1.5%, right around 40 handles. I got the old friend, the Dow, off about 1.75% or 451 handles there. And we even got the tech-heavy NASDAQ leading the charts to the downside, off about 2.5%. A lot of that and the weakness in NASDAQ land, of course, coming from our old friend, ye old Apple. A lot of people like to track the suppliers out there. That's obviously a big bellwether for how things are going out in that land. And I believe the XR is the model, which is the cheaper iPhone model. That's the one they had told a lot of their suppliers to ramp up a lot of their extra production lines. They expected that one to be kind of a big driver for them, a lower cost point of entry into the iPhone universe. Turns out now they're telling their suppliers to maybe dial back some of those extra production lines. They don't need them. So not exactly robust outlook for sales for that product. So that, of course, things that spook Apple spook the market, and so everyone's panicking now in Apple land. That's kind of course, come on the heels of their earnings, which were less than stellar as well. So the combo of those two has Apple yet again back below the 200 level, back below the 1 trillion mark, off about 8.5 handles, or a little over 4% right now, right around 195, close to 196 here right now. So everyone thought maybe the bloom was back on the rose. They were back squarely into the 200 territory. Today, not so much. Also seeing a little bit of spookage coming in, courtesy of our friends over there at GE. That's what's crushing the old broad Dow over there. Analysts slashing their price targets to $6. That's a pretty rough. I think GE's in the $8 range right now. Let's see. Yeah, $8.10, off another $0.50, or about 5.5% out there. It's been a long, kind of rough run here for GE. They have high leverage. Analysts not liking. Not much cash. Bad earnings results. They're having problems with their power unit as well, like turbine failures, all these kind of weird issues over there. And also cutting the dividend. The market never likes that. So all of that kind of combining to seeing the stock getting crushed 4 sessions in a row now. And also seeing analysts coming in and saying, yeah, not so much. We think it's got another 2 handles to run on the downside, another 25%, this thing could sell off. So all of that not exactly sparking a lot of confidence. And all that is the reason we got so much red on the screen today. We also got, of course, our old friend VIX Cash getting a little bit of life back today, up about almost 3 handles. Let's see, how high did we get intraday? Let's see. Well, I can't bring that up immediately right here. So instead, I will toss it to the Rock Lobster, see what's catching his eye. And also, we're at about 20 right now in the VIX Cash. Is that the high of the day, sir?
We were a little touchy higher than this future-wise. As far as cash goes, this is right there, high-wise. So you are there, you are close, but sir, you're right there. So it's basically, I think SPX is right at its lows of the session, very, very close. As I look at everything pop up. And I'm looking at Apple is right around its lows because Apple's kind of been dragging everything down. So we're right there, right there within like a couple of ticks of the top for vol. So it is you know what? I think the reality is from a vol point of view, I think, the vol VIX-wise is very fairly priced. We're moving, we're grooving, we're shaking. After the election, VIX traded down to 16 last week, and I mean, it touched that, and then, just nothing good news-wise came after that. I didn't think the earnings were terrible, but I don't think once the press started coming out, none of the news was like, okay, let's go try to make this economy great. It was more like Washington, D.C., we're going to argue and, bitch at each other over nothing kind of stuff. So I think that whatever détente that might have existed for about 5 minutes totally disappeared as far as the market was concerned. So kind of difficult, at least from that point of view. So as a consequence, and, more bad Apple stuff. And the rest of technology, Amazon's having $100 moves every 2 days. So it has done that consistently now for literally 2 weeks, where every 2 days, $100 move one way or the other. So you certainly don't see that very often. But from a vol point of view, we hit 20 VIX, and then it backed off a little bit. So my secret VIX rule, you want to know one of my secret VIX rules, is when you are in up zone vol environment, if VIX hits 20 once, it generally will hit it twice. So for whatever reason, it's kind of like, Apple at 200 or like all these kind of big round numbers. That seems to be the number for VIX. It would not surprise me if it pulled back and then went up again. So we did like kind of that mini intraday pullback, but the bid for vol picked up. The bid for SPX picked up, and at this stage, I mean, we're 34 points from we're 34 points from 2,700. So I don't see why we wouldn't go there. I mean, it's the law of big numbers, and that's kind of where we are. So what the heck? Let's get on that number and see what happens. So at this stage, everything looks so weak and kind of yucky that it would not surprise me at all to see that number. Weak and yucky, I like it. By the way, so yep. you're gonna like some of our vol from our recent tweets highlighting your vol piracy. So you probably would like to enjoy those and maybe retweet those. I'm gonna do it as we keep on rolling. Mr. Uncle Mike, sir, you're not quite the pirate type. But we were talking boatmen, so we got a bit of a nautical theme going on. What's catching your eye in today's turbulent waters of the market, sir? See how I kept the theme rolling?
That was good. But first off, in terms of pirate, I do a pretty good pirate impression for the preschoolers at my church. It's a sight to be seen. Most of the kids like it, but typically there's one little girl that's scared to death when I walk in the room. But when 9 out of 10 kids are happy, it's a good thing.
Now I'm intrigued. So, I might have to come see this Uncle Mike pirate display.
It's really good. Anyway, on to the markets today. So what we have today, what's different today from previous downturns whenever we have had these pullbacks is that a lot of times stocks are down, commodities are down, or gold and silver are down, and then bonds are also down. But today bonds are up, just looking at TLT going higher on the day. So that means that this pullback could actually make some sense in some ways, and that it's not like the money just goes in someone's pocket for a day and then maybe the next day something comes up. Today, it seems like there is a move away from stocks into bonds. Now, the main thing that's driving the market down today, I believe, is the tech sector, XLK being down over 3%, and of course, Apple being a big part of that. The other things of note that we're looking at, financials, and looking at that, down 1.6% on the day, relatively similar to the market. Energy down 1.2% on the day. Of that, it's very close to where the actual S&P 500 is actually down, being down roughly 1.6% on the day. So with it, let's all point our finger at Apple and the tech sector and say bad things about it for those of us bulls out there. Okay, good. Now that that's done, let's get back to work. On this, I think that you need to be cautious in markets like this. From a technical standpoint, we could be coming close to some levels of support that we had put in roughly in June as well as May. if you are a technical kind of person. But with that being said, you need to have risk management in place in a market like this, and make sure you don't have too much on the table, because if you do get caught being over leveraged in markets like this, it can be some pretty painful times. If you are bullish on the marketplace for the long term, now would be a phenomenal buying opportunity for you. However, if you're over leveraging yourself and planning on just catching a pop in the near short term, make sure that you have risk management put in place by your position size, as well as what your strategy is. The old saying, the market can remain irrational longer than you can remain solvent. Always have that and always respect that whenever you're trading leverage trades. In terms of where we are, I think that if we can survive today without going down too much further, or even touching the 2,700 mark and bouncing off of it, as Andrew said, I really do believe that this could be the second chance at a buying opportunity if you missed it a couple of weeks ago, back in Halloween, back when Mark was really scary.
I'm always scary, sir, especially just even in the morning before I have my coffee. Then it's truly a sight to behold there. But speaking of things to behold, let's see what everyone else is beholding in the rest of the week here as we're crushing. There we go. That's better. All right. Just doing a lot of live tweeting as we're doing the show here, which is busy, our listeners here. But let's keep on rolling here. Yeah, we got earnings still going on this week. Some names popping off today, not so much. The big name coming out today after the bell, we got Eventbrite. There you go. So there you have your free event status. Everyone kind of likes to watch them, obviously. Equitable, got a few others popping off there. Not a lot of big names, though, coming off here today after the bell. Tomorrow, before the open, we've got, we got Home Depot here, and then we've got after the bell, everyone's favorite, Pet IQ, SurveyMonkey. Also, they've been on the news recently, so they're coming out tomorrow after the bell. Uncle Mike, cover your ears. Wednesday, we got Cisco. After the bell, Uncle Mike's nemesis, friend/cohort/nemesis. Blue Apron before the bell, Macy's before the bell as well. Thursday, we got some retailers out there. A lot of big names popping off on Thursday. Got good old Walmart, JCPenney if you're in that side of the fence. But after the bell, we got AMAT and, of course, NVIDIA. A lot of you guys like to sling that bad one out there. And Friday, we got Viacom. I know, Mr. Rock Lobster, I know you guys are playing a little bit in NVIDIA of late over there with the crazies. It's south of the 200 handle as well. NVIDIA taking, I think the technical term is a drubbing today, off 14, nearly 15 handles, or over 7%. You guys still slinging it out there? What are your crazies up to in NVIDIA these days?
They were trading it a little back and forth. Funny, we were looking at 150 puts in there in NVIDIA. Hard to believe that. I don't think they're cheap like they were before, but they've taken quite a bit out of this stock, quite a bit. So. As far as the type of trade that you want here, I think this is a oh my gosh, yeah, because we looked at the two last week. We looked at the 215, the 190, 215, 240 reverse iron fly. So buying the guts and selling the strangle for this week on a not like so much a punt, but like a 1 or 2 day vol trade. So that is worth a tremendous amount more money right now, because it went right to the strike in like 3 days, the short strike, which is good. So the reality is, this is a realized vol market. You need to find ways, like Mike said, to manage risk. And for now, tech stocks are all over the place. So like I said, you don't normally think, I want to put on a trade that makes money if Amazon moves $100, but that's what you have right now. 2 to 3 days. If it moves up or down $100 and the trade pays, you'll probably win. So that's what it's been like for 2 weeks. And I don't see any, everybody loves it and they hate it, and they love it and they hate it. And right now, like with NVIDIA, same thing. We have earnings coming out, but it's still swinging a lot more than it should prior to earnings. Because all the rest of the tech stocks are swinging more. So Amazon is 1636, 1500 was the low, recent low. It wouldn't surprise me if any of the Q stocks touch their touch their old lows anytime soon. Google seems to be holding up. Intel seems to be holding up relatively well. Microsoft is holding up very well. But, anything with kind of a really high multiple in tech is getting smacked. Not like Google's a cheap stock, but not a crazy multiple for the growth. Not like Amazon, which is priced at an astronomical value. So I just think the market's taking that high multiple out of these stocks, and it is not ready to put it back in again.
Go figure. The high flyers, when they fly high, they fall quite aggressively as well. So the high flyers rocking and rolling out. Speaking of some high flyers that are falling today, let's get to our old friend Tesla and some other names, including some intriguingly timed paper we profiled last week. Let's get to it. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show we get weird, we get wild, we get crazy. Let's see what else is getting crazy out here in the market. And our old friend Tesla is always crazy. If a day that ends in Y, chances are something crazy is happening in Tesla land. They had some news about finally appointing their chairman, because Mr. Musk can't be allowed to be the chairman because the SEC says he's a crazy wild person who shouldn't have anything to do with being a chairperson of a public company, but he can still be the CEO. That's okay, as long as he pays his $20 million fine. That's all a conversation for another day. Instead, let's get on to what's going on out there. It's taking a drubbing today, off about 12 handles, about 3.5%, about 338.5 or so out there. So shy of the 350 level again, but well north of the 250 level, which it was at just a few weeks ago. So I guess be thankful if you're a Tesla bull, and maybe be happy if you're a Tesla bear. A little bit for everyone out there in today's market. Speaking of a little bit for everyone, we like to go out a little bit beyond and see what's going on for everyone out in the far, far downside. Actually, not that far anymore. They used to be a lot farther. Jan 2019 seemed like so long ago when we first started profiling these. Now, not so much. The Jan 2019 50s are where we begin our foray, our journey, our examination here. And they're lighting it up again today, 1,300 on the tape so far today. These things, if you're wondering, trading about a dime. 68,000 open. They got up to about 75,000 OI a few weeks ago. Looked like a little bit of a come off a little bit since then. About 600 of the 75 puts and about 1,300 of the 130 puts, which is a weird strike. We don't see that one lighting it up too often here. So maybe a bit of a weird 130-50 vertical, almost exactly similar volume going up on both strikes. That would be an interesting choice. Maybe taking advantage of the fact that everyone's got those 50 puts. Maybe they're a little bit bid up. Sell those, buy the 130s. Not the worst thing I've seen out there. Maybe they've been listening to our show and decided, these 50 puts are a little bit juicy. Let's go take advantage of some of that with a nice little juicy vertical. Let's go on out here as well. Let's scroll. Let's continue the scrolling machine. Here we go. The Jan 2020 par puts doing about 240 on the tape. 28,000 open over there overall. 70 puts, 166. 360 of the actually not the 50 puts. No, those are only doing two. It's the 35 puts lighting it up today. So all sorts of weird puts, but the Tesla downside is alive and well out here, listeners. In case you were concerned, bulls, bears, love them, hate them. Everyone likes to talk a little bit of Tesla downside here. Let's keep on rolling, and let's kick things off with a paper name we talked about last week. I haven't talked about this one in a long time, which is kind of why it resonated with me. And then when it popped up again on the headlines today, it kind of was enough to scratch the old shins. If you remember last week, listeners, on the 5th, so exactly a week ago, we talked our old friend Zynga. Zynga getting a little bit of love. Zynga, in particular, what we saw, it looked like some pretty sizable open and call love, lifting offers, going through the offers, actually, for some June 4 calls. The stock was around there a little bit shy. Let's see, where it was a little bit north. It was shy of $4, obviously, but it wasn't. I think it was like around 360 or so. And it seemed interesting. Total about 25,000 going up there on that print there. And then, interestingly enough, as we talk Zynga, we haven't really talked Zynga, in a while on the show. It didn't really resonate too hard. And then, of course, today's headlines come through. That game maker Zynga stock skyrockets after landing partnership with Disney to make a Star Wars mobile game. The stock did take off. It actually broke through that 4 handles, up over 10% today, 11%, got up to 414. Let's see how high. I bet that's as high as it got intraday. Let's see. But now it's a rough day to be breaking this news, because the rest of the market has decided it does not want to play ball with the rally ho mode, because the stock is actually off now. Off 7 cents, or about 2%. It's right around 354 now. So here they are. They had this great news coming out. This stock could have used a nice little shot in the arm, and it did look like it was working. The stock was through the 4 handle. So granted, June, not the highest gamma name out there. So if you wanted to have a near term, you think a near term pop was coming, you probably wouldn't trade in June, which is why these seem like an interesting choice. But still, it was interesting to see. They said they put these up for about 37 to 39 cents. That was kind of the range they all went up in. They traded as high as about 45 cents, so not a huge explosion. But again, the stock actually got to 48 cents shortly after we actually got to 50 cents, not that long after we profiled them. So they had a little bit of a run there, and they were looking kind of good. And then we saw this rally kind of just lose its legs. So it's a bit of a weird one. Mr. Rocklop just actually, these things right now, they are 32 cents at 37 coming out. So Mr. Rocklop says this kind of heralds the interesting nature, also the danger of trying to just play straight up. I'm going to follow the leader here in unusual activity, because this one seemed like it was well timed right up until it wasn't. Which is kind of interesting. So he gets the news maybe he was looking for, maybe hoping for, but not exactly the stock move or the option move he was looking for, Mr. Rocklop. So how many times have we seen this here? Many times.
We have, oh my gosh, how many times over the last 7 years? Can you believe we've been doing this show at least? Oh my God, I've been doing it for 7 years. So right now I'm freaking out a little bit all of a sudden. I just realized I'm a lot older than I was. And Zynga is exactly where it was when we started talking about it in the what is it? It's 2018, like what, 2011 or something, or 2012. It at least seems like there's more. Today would be one of those days where, wow, I think there's like a little bit better. So they announced the news, the stock is down. Clearly somebody, I guess I was probably front running the news. They picked June. And I'm not seeing a ton of volume on those options today, but I'm just pulling it up as we speak. June, yeah, so there's 14 contracts traded in June.
Yeah, it's all still open. He didn't get out anything.
So I think it's there. I think it's there as a trade. The news is good. I don't know how much that's going to really help Zynga. And it's kind of surprising that I guess Disney doesn't make video games. So actually, when you think about something like this, why would Disney give the franchise like this? Well, they didn't give it, right? So they have a partnership.
They license it all now. Yeah, they shut down a lot of their internal development a couple of years ago. They licensed all their stuff to like EA and a few others now. They don't make any. I guess they took a bath on their Disney Infinity, the one with the figures, and they decided that's it. We're done. We're shutting all this stuff down, and we're going to license it all and make more money that way, and not have the cost. So you're right. It is kind of weird that one of the biggest content houses on the planet doesn't make their own games, but they farm it all out to quality players like Zynga.
Right, and I could see that at some point, like Zynga's pretty good at making the games. That this could be like how Disney does stuff sometimes, like a potential takeover acquisition. Didn't they? What did they take over? I know they bought some. What did they? Pixar, right? There was Pixar Animation Studio.
Well, that was back in the day, but yeah, they did that. They picked up Fox more recently.
Yeah, but they certainly are. They are looking, right? They're looking at stuff. So I don't think this is a bad way to trade it. That has a lot of leverage for buying you can buy those 4s now for 37 cents. They're not really going to decay. I mean, Zynga's pretty much sitting at whatever the cash value is. It just looks like a low risk way. I don't know if I put all my money into it, but it doesn't look like a bad way to trade something like that, especially on a stock that just moved to $4 today.
The irony is they already
know it can do it.
Yeah. The irony is they kind of already decayed. You already got the decay built in. You're getting the post decay price here. This guy paid the decay for you. He bid him up, and then it came right out. They were offered in his face shortly thereafter, even though he got the move he wanted. which is just the ultimate slap in the face. Let's keep rolling, see if there's other slaps that are intriguing. Let's do another review of some paper we talked about on the show not too long ago. This goes back to the 1st of November, so about a week and change ago. We were talking about, looks like some opening upside call love in everyone's favorite name, Entercom Communications Corp, ticker symbol ETM. This is a radio broadcasting company. They average, looks like about 1,700 contracts a day. So that's not bad. Today doing a lot less than that. Today doing a whopping 31. So yeah, this is the light name here. But we recorded some decent paper going up here a couple of weeks ago. It was the Dees 8 calls lighting it up. Paper coming in, pretty much gobbling up all they could on the offer for 15,000 of these things for 25 cents. Interesting. Clearly had some, these are Dees, by the way, clearly had a little bit of earnings implication involved because earnings were on the 6th of November, so about last week. And it looks like, just going back on this one, this trade didn't maybe work out exactly the way our friend here hoped. The stock was looking good. The trade was looking pretty good in the initial aftermath of it, right? Going immediately after earnings, the stock was threatening $8. So it was all moving in his direction. It seemed like things were going well up there. Let's see how high these... Yeah, these options actually traded as high as 85 cents, the Dees 8. So he had a chance to take his money and run and look pretty good doing it. And then for whatever reason, we see this a lot, they did not close these bad boys out. And now the stock is off. It's down to about $7 and change now, so well off the threatening of $8 high levels. The options are clearly off as well. They're 15 cents at a quarter, so he can go back now and buy all he wants for a quarter more if he's so inclined. I'm guessing he's not. And there's still about, 17,000 and change open on this strike. Worth noting is also 18,000 of the 9s open here as well. So a lot of love, a lot of paper on these bad boys. But either way, these Dees 8s seemed like they were working out right up until they didn't. Mr. Rockloff, so we got some sad tales here. You know, we got the Zynga guy. He seemed like he was on the right end right until he wasn't. This guy, his trade was working. I mean, obviously he could have bought these as a hedge against the earnings, in which case he's probably happy it didn't work out, but that's probably a more rare use case. Usually these are ahead of earnings. There's something else afoot here. But I don't know, still, we got two guys who, at least on the options side of their trade, the options leg, had a chance to look good, and now they're not. Maybe kind of bringing back an old option pit adage that, you got to take your hedge off, right?
You got to close. I mean, you can't. I mean, you think about it? What good is a hedge if don't have it on for money? I mean, I started scaling out of some SPX put flies today that we own versus some vol trades. So for that very reason, we're down a bunch, and I want to take some of the delta because the delta, your position slides as time goes on. If it's a trade, if you have a trade, it's a trade. If you have a hedge, you want the hedge to make you a bunch of money because if the other side, loses money, you got to capture it. And now you have all this money to go do what you want with. So net, you might not be up a lot of money, or you might even be down small, but you just, you're in at a much lower basis, which is kind of the idea. In order to do that, you got to close. So, but you never know. Somebody could have sold stock at 8, shorted stock against it. That's a liquidity provider move. You have the big move against a ton of gamma. You short a bunch of stock up there, it gets lifted, and you trade the, what they call dynamic hedging, I guess, is what when you read books about it. So that's a
charitable interpretation, sir.
Charitable when you read books about it. I'm all like my clients like, hey, where'd you learn all this stuff? I was a floor trader for 15 years. How do you think I learned all this stuff? Well, you can't. Where do I find a book about it?
Yeah, that's the best. Where do I find a book about being a floor trader? You got to go back in time about 20 odd years.
Yeah.
And you got to come to Chicago.
All this stuff? So
and all that other fun stuff. That's why we say best educators still came through the floor. That's kind of just the way it works. That's the best way. It's like learning a language. Immersion therapy. You sink or you swim. But yeah, instead of beating that dead horse. But you're right. It is interesting. And you're right. There are other alternatives, other ways this guy can make money. He could have been gamma scalping the whole way. All these things could have happened. We only see, obviously, the options leg. But still, just a bit of a narrative here. Let's see if we can turn this narrative around, Mr. Rocklop. So this one actually is some paper that's lighting it up today here. Let's see. We got our old friend here. This is what we got here. We got Barclays. Yeah, Barclays. BCS. Looks like we got some put love going up today. Barclays, this is the name that averages about 1,400 contracts a day. Today doing over 12,000. So not quite 10x, but threatening it out there. It's off a little bit today. It's off about 4%, or right around $8.80 right now is where it's trading. And today looks like, again, maybe this guy is on the right tip here, at least for today's action. We got some put love. Looks like some open-end put love here on the June, out in June. So June is the month du jour here in the odd block today. To the tune of the June 9 puts coming in for $1.05, almost 10,000 times. Total of 10,562 trading on the day. This block going up with nearly 10,000 for $1.05, right on the offer again. Again, opening, there's actually zero OI to speak of on this strike, so it's all opening. There are 95 cents at $1 right now. Again, 10,000 printing at the 105 level out there. Looks like this is pretty much as it appears to be here. Let's see. Let's pull up a chart here at Barclays before we draw any lasting conclusions here, just to see what our spidey sense tells us here. Let's go back. Let's change. I don't want to go back 6 months. I want to go back a year. There we go. So a year ago, Barclays was $9.31. Not too much off of where it is right now. Then it got up as high as in the 12 handle, 12.20 or so back in April of this year. Then it's kind of been on a bit of a long, slow kind of grind to the downside pretty much ever since. Got down to 8 and change, pretty much 8.30, so not that far below where it is right now back in October. Then it's kind of had a little bit of a rally briefly near term, back up almost to $9, and now it's kind of vacillating in this little bit shy of $9 range. So Mr. Meatball, these are Mr. Rocklaps, I should say. I don't mean to offend you. These are interesting for a couple of reasons. First off, we don't see a lot of in-the-money puts going up here. Usually, if the people are doing the old standard hedge, it's slightly out of the money puts that they're doing. Longer term put love usually equates some sort of equity holder, usually doing a hedge. Not always, but usually. So that's usually the feel here. But our friend here taking a meaty hedge and doing it for $1.05. That's perhaps intriguing in and of itself. What's your spidey sense telling you, sir, on these now in the money June puts?
Barclays, they were kind of a poster child for bad bank governance, and then we had Deutsche Bank not long. So, you have more EU troubles, and I think that's a big part of our market issues, let's call it. Why they have why things are so weak. Like there's more Eurozone, Italy. All of a sudden, these like massive government deficits that we've acquired over the last 10 years without a lot of economic growth to show for it, I might add. Couldn't we all just kind of just poked along with no growth and the governments did not spend all this money? But anyway, that's what we've got. And I think Barclays is one of those banks that people look at the great unwind, and it's kind of a worrisome spot, especially from the financial crisis. So you look at that and you go, all right. But it does look like a very sort of defensive but aggressive, stock going down put. It's one where it's kind of, like you said, it's meaty and somebody's expecting the stock to perform poorly.
Yeah, you don't buy that kind of thing unless you're expecting, I think the technical term is some crapola here in the near future. I just want to check really quickly to see if those bad boys went up tied. No, they just went up. I don't see them printing as tied. There's about almost a day's worth of volume up already on these, but again, that's a lot of stuff going up there as terms of stock. But I don't see these went up specifically as tied. Again, it could have been done with that. It wouldn't be surprised. They went up late, which is interesting in and of itself. But we got to keep on rolling. Speaking of late, we are late to get to some strategery. It is time to dive on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block, the portion of the show where Uncle Mike holds court for an hour, maybe two, on a topic of his choosing. Today, Uncle Mike, my birdies have been pecking at me, my minions as well. They've been throwing jam at me. And in between that, they've been whispering, about saying adjust. I need to adjust. I thought the first time I meant I needed to adjust my posture. But then I realized, oh no, with today's kind of sell-off, people may be looking to, let's say, move their positions around a little bit. What do you got in store for them today, Mr. Uncle Mike?
it's funny your birdie should mention that, because I wanted to talk a little bit about adjustments today and what can be done, things that you can do, and why you may want to consider doing them, if at all, because doing nothing actually is doing something in the option world. Not talking about doing stuff. That's something altogether different. Anyway, I digress. Let's talk about adjusting a short call and adjusting a short put and some of the differences, benefits, drawbacks, that type of thing. Now, for purpose of today's example, I'm just going to assume that you sold a naked put or assume that you sold a naked call. Not because I condone either of those or I'm recommending those by any means, but I just want to keep things simple for the points I'm trying to make today. Oftentimes, or actually every time that you run into one of these situations, the rules would apply in this, what I'm about to say will apply to the short call and the short put, whether you're in a spread, a short, or in a covered call position, or whatever the case may be. So with that being said, let's talk about adjusting a short put. Now, the market's going to go up, down, or stay the same. It's not possible for it to do anything different from those three things with which I mentioned. It can do them over different time frames, but let's talk about what happens to your short put should the market go higher. And by market, I'm referring to either the individual stock itself, or if you're selling options on the S&P, I could be referring to SPY, but let's just assume an underlying for right now, whatever way you want to use it. Also, let's assume a stock-based underlying, because what I'm about to say does not typically apply to commodities and commodity-based options. So as the stock goes higher and you're short a put option, you're happy because of the fact that you're making money on the trade, at least for the time being. But why are you actually making that money? Well, let's go through the factors of option pricing. Time decay. So long as the sun rises the next day, you have time decay working in your favor. It's a wonderful, awesome, beautiful thing. So theta is one reason with which you are making money. Next reason with which you are making money would be from delta, meaning the stock is going higher, the value of that put option is going lower that you sold. That's the next reason you're making money. Next reason could be, and this is one you never know, of course, implied volatility. Oftentimes, markets have an inverse relationship to implied volatility, meaning as the stocks go higher, volatility goes lower. And if the volatility is going lower in that put option with which you had sold, that's a good thing for you, and that's another benefit as to why you are making money. So that's how you typically make money on a put option that you sold as the market goes higher. Those are the reasons. Now, if the market stays the same, the only reason you could make money would be if, volatility could change. But the main reason that you could make money on a short put option should the market stay the same is time decay, of course. And now let's talk about what to do if it goes against you and the market goes down, like some of you may be experiencing today in some short puts with which you're selling. So with that, the market's going lower. You still do have time decay on your side, but remember, time decay is just one factor. It's also a very small factor if the market's moving against you significantly. Yes, time decay is something that can help you, and it can really save you at some points if you hang on to an option long enough and the market doesn't go in there and the underlying doesn't go in the money. However, oftentimes on days like today, where the S&P is down 1.7% or over more than 1.7%, time decay is really not going to help you much. Now, how are you losing money? Well, you're losing money in the same way, in the opposite ways with which you were making money when the market was going higher. You're losing money with the delta going against you. Remember, puts make money when the market goes down based on delta. Not all puts do, depending on the strike, the expiration, that type of thing. But for the most part, markets go lower, puts make money. So you're actually losing money on delta. Next way with which you're losing money, which is one that's a little bit more complex, but you need to be aware of, is on implied volatility. As the market is going lower, the implied volatility a lot of times will become greater. So not only are you losing money on just the delta, you're losing money on vega as well because of the inverse relationship that typically exists between stocks and volatility. So have an understanding that you have not only just the underlying with which to be concerned, but you also have those other option factors. So how on earth do you adjust these things? Well, if the market stays the same, perhaps you can just adjust to maybe a further out time frame as you get closer to expiration, or you just can kind of sit on it until expiration if you're happy doing that. That's not happening very often in the market these days, but it does need to be covered. If the market is going your way, how can you adjust that put option? Well, I'm typically not a fan of just sitting on it until expiration and letting it expire worthless or letting it get put to me. I typically want to, especially when the market's going higher, I typically like to get out of the put option for 20% of the premium that I initially took in. Now, what I mean by that is let's say that I took in $1 for that short put that I sold. I'm typically looking to get out around 20 cents. So that way I've captured roughly 80% of the upside. And the final 20%, I always like to use an analogy. It's like squeezing out a wet towel. At first, you can squeeze out the water, but then you squeeze and squeeze as hard as you can. The towel's still wet, but there's no water coming out of it. And that's kind of how I view the final 20% of premium when selling short options. Now, what if it goes against you? The main thing that we were looking to listen to today, or what can we do on this one? Well, a couple things. I'm typically a fan of trying to make some type of an adjustment or just getting out when I've lost what I'm trying to gain. So in this case, let's say I sold that same short put for $1. When that same short put reaches $1.80, because I was trying to make 80% of my profit on there, but as soon as I can get to the $1.80 to where I'm down 80 cents, that's the point with which I need to get out or adjust or do something. Now, adjusting a put going against you is shockingly not as bad as you'd think. I don't think anyway, because with volatility going higher as the market goes lower, you have the ability to roll out another few strike prices or maybe go down another month, whatever the case may be. Because vol is going higher at a faster rate, typically at further out of the money puts, then by doing that, adjusting to another short put strike price is something that prices oftentimes line up to be pretty good. Now, you're going to lose money on the markets going down. There's no getting around that. But if you're looking to continue to be in this position, rolling down and out a put option that you're short is not often a bad thing. Now, keep in mind, if you're doing this on a stock that continues to go lower and lower and lower, you're not going to win just because of what I'm saying. But let's say that the stock is a little bit overdone that day and you want to stay in the short put somehow, some way. Rolling down and out a short put is not exactly a bad thing. You just have to continue to monitor it and continue to work with it. Now, let's flip this over for a short call. We don't have a ton of time left, but I do want to cover this briefly. Rolling a short call is hard. If the market stays the same, of course, you can make money off of time decay. The market goes lower, you make money off of delta, and you really don't quite make as much off of vega because of the inverse relationship. Because remember, volatility is going higher in this short call. In theory, it doesn't always work that way, of course. Now, I'm bringing this up because I've had this conversation with a couple of clients recently on selling short calls against their positions. I'm not against selling short calls by any means, but I can just tell you from 15 years of experience, or over 15 years of experience, when a short call goes against you, it is difficult to roll it up. And what I mean by that is because of the fact that volatility is becoming lower as markets go higher, finding rolling up and out or something like that, you can do it, but the prices typically aren't near as favorable on the call side as they are on the put side, at least from my experience. So have that in mind, that when a short call goes against you and you're thinking, I'll just roll it up if I get called away on my covered call or if I'm doing this on my diagonal, it's difficult to do and have it continue to and have it work as well as it could do on the put side of it, because vol becomes less and less when you need to do it. So couple of things that I like to do when I'm selling short calls, a lot of times, not every time, but a lot of times I like to buy another long call out of the money and just sell a call spread. I like to use that as my chicken wing analogy. What's the best way to get out of a double chicken wing in wrestling? Don't get into it in the first place. And by buying another call further out when you sell the call, you kind of help yourself that way to where you know that you won't be a part of the market gain from between the strike prices, but anything above it, you can still participate on it. Or if you want to roll the call spread and you have some gains on that long call, then it becomes a little bit easier. So I like doing that. I also like to follow the rule to where I'm doing one of two things. Number one, I'm looking to just sell a covered call, and if I get called out, great. I don't care. I'm happy. Or if I lose what I was trying to gain, that's the stage with which I need to make an adjustment of some sort. And, of course, if I am doing that, I would likely want to be doing it where I'm selling a call spread instead. So, food for thought. Adjusting short calls when they go against you is not the easiest thing to do. And adjusting short puts when they go against you, it's by no means easy. And you have to be extremely nimble because markets typically go down faster than they go up. But the benefit when it comes to volatility is oftentimes a great thing to help offset things as you're doing it. So keep that in mind. And that is the strategy block for today, November 12th, the day after Veterans Day. And I am Mike Tosaw.
There you go. Mr. Uncle Mike, well done, sir. Well timed as always. We got to keep on rolling into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're watching on our screens until the next time we gather here together, at least on this show on Thursday. I also want to do a really quick payoff on some of our poll questions we've been asking you guys lately. We asked you guys last week. I'd like to do our check-in, our regular kind of, since we're coming off the strategy block, a little bit of a strategery check-in out there, asking you guys just quite simply, what's your go-to in the options world these days? What's your strategy you find yourself using the most? And we gave you 4 choices: flies, covered call / short put, verticals, call or put, we don't judge, or calendar / diagonals. And the results are actually kind of surprising. 48%, nearly half of you saying verticals, calls or put, which is interesting. I did not expect that. I thought covered call, short put would probably be number 1, but it was not. Actually, number 2 was calendars or diagonals, which is also surprising. So that's usually kind of more of an options 102 / 103 type of topic, but you guys like that as well. Again, speaking to the savvy nature of our audience. Number 3, the covered call / short put. Number 4, the old fly, 14% only for the butterfly. This week, we're asking you kind of in keeping with our crystal ball. It's always fun on our Volatility View show on Friday to play along with the crystal ball. So I thought we'd give you guys an opportunity to do just that. That's, of course, the portion of the show where we have to pick where VIX is going to be. VIX cash now on 1 p.m., so end of the show time, 1 p.m. Central on Friday. Not the end of the market, at the end of the show. So it's a challenge, and it's a difficult thing to wrap your head around. We gave you guys a chance to play along this week. We asked you guys, gave you some ranges, also give you chances to fire off your specific vol levels. A lot of you have done that. We'll save those for Friday. But the poll here is right now we gave you 4 choices. So VIX cash at the time it was about 17.75 or so when the poll went live on Friday. So we said in that range, 17 to 18.5, a little bit higher, 18.5 to 20, even higher, over 20, or lower, 15.5 to 16.99. Mr. Rock Lobster, what do you think is winning our poll right now? And more importantly, you didn't get a chance to play on Friday, so what is your guess?
I didn't get a chance to play, but I think we're going to stay 20 through the week. So anything 20 or above, that's what's winning.
Interesting. You're feeling the even higher level out there, which is funny because I was fading, and your boy the Meatball was fading vol pretty hard. I didn't fade as aggressively as I usually do, and he took the opportunity to fade super aggressively. I believe he was, 16.49. So he's feeling a lot of downside here this week. I was the comparatively reasonable 1765, which is about where he was when the poll started. Our listeners are kind of all over the place in terms of their specific picks. A lot of them seem to be above the 20 level, so they're kind of feeling what you're feeling, Mr. Rock Lobster. Right now, 41%. I think there's some of a recency bias here going on. Usually we do these very quickly, a flash poll, but it's kind of cheating. Let people vote late on the VIX pick. But hey, we'll be nice this week. So we kept it going for a few extra days. So far, 41% saying 18.5 to 20 range. Then 25% saying lower, 15.5 to 16.99. And then tie for 17% for third with 17 to 18.5 and higher, over 20. So interesting stuff. I got to imagine those numbers will vacillate as VIX moves around a little bit. We were nice. We gave you a few days left, so it made it easier to play this week as opposed to doing what we'd do, which is have to look into the future on Friday to see what next Friday has. Speaking of the future, Mr. Uncle Mike, we'll start with you, sir. What are you watching for the rest of this week into the weekend?
Well, I'm definitely watching volatility with VIX right around the 20 mark. This is something that's very significant, to say the least. I'm curious to see if we can hold these levels on SPY, as I always am. And I think the main thing that everyone's looking at right now, myself included, is to see what they can recover, see if they can recover from this pullback as the fruit company, Apple.
A lot of people watching that one. Whither Apple goes, so goes the market many days. Mr. Rock Lobster, same question for you, sir. What are you and the crazies out there in the pit chat watching these days?
I think Apple is definitely, like what Mike said, that's a big one. And watching interest rates and how this whole EU thing plays out. So it feels like a market that, all-time highs this year. I guess so, but I don't see where the good news is going to come from. I guess there could be great trade news. I think that would be the lift we're looking for, because something would be moving forward. I think we're in this kind of stasis after the election. We had some high vol into the election, and then after the election, it sold off. And then all of a sudden, the gridlock Congress and all that stuff, and we don't have trade deals, and oil prices are going down to the same old crap that just makes, and then people are losing, I guess, faith in technology stocks just having insane earnings growth. So I think that's what we've got. I think short term we'll still have what I would call a tradable vol, because it doesn't look obvious that there's anything awful. But good news on any trade front, especially with China, I would give the market a little bit of a kick. And that's what could drive vol down by Thanksgiving.
Speaking of kicks, we're getting the kick out the door here. That music means we have come to the end of this epic boat ride through the River Styx, to complete my analogy, my torturous one from earlier here in the show. But before we go, let me go back around the horn, check out my cohort, see what they have cooking that may interest you until the next time we can gather here together on the old program. We'll start with you, the aforementioned Uncle Mike. Sir, if I'm intrigued by this adjusting and rolling and all the stuff you're talking about today, and maybe I want to learn more, where should I go? What should I do?
Well, by all means, come to the shores of the River Fox in St. Charles and come and see me. This Thursday night, I'm having a meetup. Go to meetup.com for more information on it with the St. Charles Investment Group. The title of the meeting is going to be, What the Heck Do I Do Now? Markets have pulled back. We're going to be talking about things with which we're trading. It's at my office, 303 East Main. Make sure you sign up on meetup.com. And if you have any other questions about anything that we do here at St. Charles Wealth Management, by all means, visit my website at stcharleswealth.com.
All right, Mr. Rock Lobster, same question for you, sir. What is cooking in your neck of the woods, sir?
We just had our Saturday class. Look for December 5th. We are doing something with the CBOE, which probably I think is going to be unique in the industry. We're doing a deal with them. They're supplying the live vol platform. We have created some proprietary spreadsheets, helping people look at when to get in and out of butterflies, when to get in and out of short gamma, when to trade time spreads. All that stuff gets optimally priced by the market, and the spreadsheets help. So that's stuff that I've been teaching our pro guys here for a few years, and we're now able to kind of put it into a spreadsheety commercial availability for people. So if you're interested, you go to the CBOE, their website, or the Live Vol Pro, December 5th. We're going to have some announcements on it. The webinar is, I believe, free because it'll be kind of informational. But then after that, if you're interested in the mentoring and actually how to trade this stuff, that will be the stuff that we'll be selling with the CBO. So there you go.
Check it out. Just in time for me to cancel my live vol. You're doing all this cool stuff. So there you go. Maybe I'll keep it going. My frustrations with the new upgrade have been legion, as you guys have heard me on the show before. But that's a conversation another day. Speaking of conversations, I just saw bad news coming across the tickers like Stan Lee, maybe past tense, he of Marvel fame. If that's the case, that is indeed a sad day for us all. So Excelsior to you, Mr. Lee, and on behalf of all of us, the Rock Lobster, and Mr. Uncle Mike, and indeed myself, I want to thank you all for downloading, streaming, subscribing, all the other fun stuff that you do. Keep it coming, and we'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.